If you've been looking into cheap health insurance recently, you may have come across something called a shared ministry health plan. At first glance, these programs can look a lot like traditional health insurance. They advertise monthly payments, networks of doctors, and help with medical expenses. Marketing typically presents them as a faith-based alternative to regular health insurance plans, often offered at a much lower cost. But here's the catch. Shared ministry health plans are not real insurance plans, and many consumers don't realize that until it's too late. Today we're going to talk about what these programs actually are, why critics say they can be misleading, and what you need to know before enrolling. Let's get into it. Purchasing a shared ministry health plan gets you access to a healthcare sharing program, not a health insurance policy. Instead of buying insurance from a regulated provider, members contribute a monthly amount, called a share, into a pool. The pooled share is then used to help pay members' medical expenses when health problems arise, if they meet the organization's guidelines. The concept is extremely appealing for religious groups not only wanting to save on their insurance, but to look out for other members of their congregation. And on the surface, it sounds like a small-scale religious version of the business model major insurance companies use. Everyone buys in each month, and the company pays claims from the collections bowl. However, because these organizations operate as religious ministries, they are not regulated like traditional accredited insurance companies are, meaning they are not required to follow many of the consumer protection laws created under the Affordable Care Act. They also may not cover what the government has deemed essential health benefits, or the bare minimum healthcare services that a plan must help pay for. So, depending on the program, they may limit or exclude assistance for things like pre-existing conditions, mental health services, preventative care like screenings and tests, maternity, especially if the patient isn't married, certain prescription medications, and more. Another cause for concern is that when people are shopping for this coverage online, these programs often appear right alongside traditional health insurance options, only with much lower price tags. The websites and advertisements frequently use familiar insurance-like language to help legitimize the program, such as coverage eligibility, monthly payments, provider networks, medical expense sharing, and others like it. To the average Joe, this can appear to be a much cheaper insurance plan, but in reality, it's much different. Unlike real health insurance, most shared ministry health plans include language in their guidelines stating that payment of medical bills is voluntary and not guaranteed. That means even if a medical expense appears to be eligible, the organization can still decline to share the cost. So even if you diligently pay into the pool for years, they are not legally obligated to pay your claims. A lot of people don't fully understand this difference because when these programs are being marketed, the similarities to traditional health insurance are typically highlighted much more than the limitations. Shared ministry health plans are also able to impose eligibility requirements of their own that influence your lifestyle and can be changed without notice. For instance, many ministry programs require members to follow specific lifestyle standards, such as avoiding tobacco, illegal drugs, and any other behaviors deemed high risk. If medical issues develop that can be traced back to something that violates those guidelines, the ministry may refuse to share that expense. So here are the biggest differences to keep in mind. First, insurance companies are legally required to pay covered claims. Health share ministries, on the other hand, are not. Second, insurance companies are regulated by state insurance departments. Shared health ministries typically are not. Third, insurance plans under the Affordable Care Act must cover essential health benefits and pre-existing conditions. Shared health ministries don't have to follow those rules. Because of that, while these programs often have lower monthly costs, members may face more financial risk if a medical claim is denied. Shared ministry health plans aren't necessarily scams, but they are very different from traditional health insurance. The key is understanding what they are and what they're not before you join. Always review the membership guidelines carefully so you know exactly what's covered, what isn't, and what happens if you face a major medical bill. If you found this information helpful, don't forget to like, comment, and subscribe. Thanks for watching.